All right, Accounting 2, we're back into it for real today. So here's how I'm going to try to do the rest of the year. I'm going to go through the chapter. I've got the PowerPoint here. I've got a copy of the textbook, and I've got Applio up. So we're going to do this like an in-class lecture, and then I'm going to do a demonstration. So first thing I want to do here is go through show you where this is in the book. And hopefully I can find it without too much hassle. All right. So here we go. So we're talking about the balance sheet, and this is the second financial statement we're going to prepare. This is not that difficult. The only tricky part about this is when we get to the section on calculating the changes to owner's equity. We'll have to go through that. I do want you to read through the chapter material because there's some information here I want to reinforce. Read the paragraph, okay, because we're talking about financial strength of the organization, and that applies here. I also want you to know the four sections of the balance sheet. The heading, of course, who, what, when. Another section is the asset section. The other section is the liability section and owner's equity. Now, the Academy of Finance curriculum, one of the things they did was separate out the statement of changes to owner's equity, SCOE. And in some accounting systems, you'll see it that way. I think it's unnecessary to do it, especially when we're looking at the financial statement for a small business. You can do it that way if you want. The chapter's got a demonstration on how to break it out as a separate report. But this is very, very straightforward. And looking at this, again, in the book, it's obvious that we're looking at the accounting equation. Assets equals liabilities plus owner's equity. So we set this up with the assets on the left side, liabilities on the right side, and we leave space here for the statement of changes to owner's equity. Okay? So you want to set this up just like the accounting equation. This financial statement is easy to do. Frankly, if you're not disappointed in how easy this is, then you're making it too hard. So we'll go through this in the PowerPoint. Now, this section here talks about how to calculate current capital. When we get into doing this, I want you to pay attention to that. Current capital means as of right now. Okay, what's going to throw you when you do the problem is you're going to take the capital account balance and you're just going to want to plug it in right here. Well, that's not correct because on our worksheet, the capital account balance hasn't been updated yet. The capital account balance is showing the beginning balance at the beginning of the accounting period, which is the end of last month. So the amount in the capital account balance is a month out of date. We have to run a little bit of math on it, which means that we have to add in our net income. Hey, guess what? Wow, there's the logic in doing the income statement first because you have to calculate net income first before you can do the balance statement. So if I ever ask you which one you do first, what are you going to say? Well, you're going to say you have to do the income statement first because without the income statement, you can't do the balance sheet. Okay, so you add in net income for the month, and then you subtract out any drawing that the owner may have taken out of the business. So you net these out, you add it to the starting capital balance, and that's your current capital. So you plug this in under liabilities, so liabilities plus equity. And then if you look here and here, you're going to get the same amount. Assets equals liabilities plus owner's equity. Boom, right there. If you don't get the exact total on both sides, you need to go back and check your math somewhere and check where you're drawing your account balances. Okay, that's a huge hint. This has a lot of proofs in it for you to be able to check. Plus, the instructions are right here how to do it. Now, going down, here's the statement of owner's equity itself. If you want to break this out, here's a detailed statement. So this, again, explains how to do the statement of changes to owner's equity. So you start with the capital balance, okay? And then you show net income, and then you subtract drawing, okay? So again, just like with the income statement, you start with more detail on the left and you move to less detail on the right. So this is an aggregation. So here's the net income. Here's the net drawing. Okay, this minus this equals this. This plus this equals this. Okay, just add them together. Get the sum here. This is the sum of all your math for the owner's equity section. Add it to the liabilities, and bingo, you've got a number that matches your assets. Okay, so that's the book. All right, we're going to leave it here. I'm going to do the work together with you in just a minute, but I want to go through the PowerPoint with you. So, lesson 7.2. Okay, how's the balance sheet prepared? Well, we're looking at standard FNAC2 AC2.1, which is classify, summarize, and record financial data, and our indicator is prepare a balance sheet. Doesn't get any more straightforward than that. So, what are our objectives? Well, we're going to prepare a balance sheet. Man, this is not rocket science. Bunning, what are you doing to us here? All right, well, if we were in the classroom, I'd have let you do a Kahoot. But I've posted the PowerPoint, and if you're set on it, the Kahoot's here, it should still be active. But that's okay. If it's not, you can make your own. All right, so what is a balance sheet report? What makes a business financially strong, and what is meant by financial strength? Well, if you read the chapter material, you can answer this, but I've done the work for you again. So a balance sheet reports information on a specific date. Unlike the income statement, the balance sheet is always changing, day to day, minute to minute. You don't have a beginning and an ending date like you do on the income statement. First of the month, last day of the month. Okay, you report your income for the month. It doesn't work that way with the balance sheet. But what you do with the balance sheet is you take a snapshot in time, and if you make it correspond with the income statement, that way, well, at the end of the month, you've got a picture of how much money you made through business operations that month, and whether your net worth increased or decreased based on business operations for that month. So most companies will prepare the balance sheet at the same time they do the income statement. But you got to remember, this is on a specific date. Tomorrow, this thing changes. So what makes a business financially strong, or a governmental entity financially strong, or a person, a single individual financially strong? Well, you got enough financial assets to take care of your expenses, and you have few liabilities, meaning you don't have a lot of debt. You don't have a lot of money going out. You've got a good margin. You can weather bad times. Now, wow, poignant, relevant. Go check out usdebtclock.org and see what's happening with our national debt right now. Ouch. Don't keel over. Okay, that's what makes a business financially strong. And looking at these statements, you can see income and you can see net worth. And if you pull multiple months worth of statements, and if you pull multiple years worth of statements, if you're doing any real research when you get to college, pull 5 years of statements. If you're going to invest in a company, pull 5 years worth of statements off of edgar.gov. This will let you analyze whether the company is doing well consistently in good times and bad, or whether it's struggling. Okay, so what is meant by financial strength? Again, poignant. It's able to be successful in both good times and bad times. Okay, it'll survive the bad times, and it does extremely well during the good times. Okay, so where's the information found to prepare the balance sheet? And what are the 4 sections? Well, we covered those a little bit. They are found, on the worksheet. Okay, and they're found in the balance sheet section on the worksheet. The information above the income summary line. So look for the row. That's the last 2 columns to the right above the income summary. And guess what? There are your numbers. So what are the 4 sections? Well, the header, who, what, and when. Then you've got the assets section, then you've got the liability section, and the owner's equity section. So this is the financial report that deals directly with the accounting equation. And these are all permanent accounts, okay? Temporary accounts, that's what's reported on the income statement. Permanent accounts are reported on the balance sheet. Assets equal liabilities plus owner's equity. Wow, all the work we've done this year, guess what? Culminates right here. So this is what a completed balance sheet looks like. Okay, the information, it's right here. This is all the information above the income summary row on the balance sheet side of the worksheet. So you've already moved all your information over from the left two columns where you did your trial balance, and then you've updated your balance, okay? So you've done your adjustments, you've pulled everything over, okay? And this number right here, remember I talked to you about that one? Okay, this is the number at the beginning of the month. We haven't done anything with it yet. Just be careful with this one. Okay, we've already calculated our net income down at the bottom. All right, so this is the information you're starting with. Okay, so these numbers get transferred directly. Okay, these go into the assets section. This one, this one, this one, and this one, and this one, and this one. These right here. These are all the asset accounts. Addy Lurk. Okay. Debits. All the debit accounts are assets. All the expense accounts, they're over here on the credit side. Okay, so we got two AP accounts, which are our liabilities. And then we've got the owner's capital account, which is the owner's equity side of the accounting equation and the drawing. Okay, then we got our net income down here. So we are prepared. We got everything we need to do our balance sheet. So, who, what, when? Pretty consistent. All the financial statements start with this. They all start with the header. Okay, moving down. What does it report? What is the accounting equation and how does the balance sheet apply? Where does the information come from for the asset section? Well, balance sheet reports assets and liabilities and owner's equity. Reports the accounting equation. Says so right here. All right, so where does the information come for completing the asset section? Worksheet title column, because you have to report the account titles on the balance sheet exactly as you show on your chart of accounts, which is the same way they're listed on the worksheet. So you pull those account titles just like they are on the chart of accounts, just like they are on the worksheet, and you plug them in on the asset side. Okay. And then you take the debit columns. If it's not a debit, it's not an asset. It doesn't belong there. Okay. So define owner's equity. Chapter 1, page 8. I'll wait. Go look it up. All right, I'm waiting. Okay, well, I guess you're not going to do it, so I'll just give you the answer like I normally do. It's the amount remaining after the value of all liabilities have been subtracted from the value of all assets. So what have you got? Assets minus liabilities equals owner's equity. It's your net worth. Where does it come from? Well, owner's equity, credit side of the worksheet balance sheet. Normal balance for liabilities and owner's equity is credit. Addy Lurk, liabilities, revenue, capital. Okay, capital and owner's equity. All right. So they're all credit normal balance. Just remember that. I know you're rusty. When in doubt, turn to page 92. These are on the right side of the chart of accounts. Blowing your mind, right? This is why the chart of accounts is set up that way, and this is why I fussed at you guys to make sure it's labeled income statement accounts on the left, balance sheet accounts on the right. Okay? So here's the process. And I'm going to set up my slideshow right now. Yay, looky, looky. All right, so here's our balance sheet. This is the completed balance sheet. So let's go through the sections. 1, owner's equity. It has to be labeled this way. You've got to put a label here and here and here. Okay, the account title, just as it appears on the chart of accounts, just as it appears on the worksheet. You can abbreviate within reason, but you shouldn't have to on this financial report. Okay, here's the capital amount. This is the current capital amount. It's not the amount showing on the worksheet. Remember, it was $5,000 when we looked at it, but this number is different. This is where my Accounting 2 students get confused, right here. We'll go through this. Okay. All right. Remember single line and double line, ladies and gentlemen. You've got to do this. This is part of it, and I'm taking points off. Okay. Number 5, our total assets. Rocket science, ladies and gentlemen. Add the sums of each of the account balances and then get a total. Can you handle that? Use calculator. All right. Where were they? Yep, total assets right there. Single line. Remember, everything above the single line indicates an individual amount. Everything below the line indicates a sum. That's what this line means. These double lines mean it's closed. It means you've checked it. This is what proving and ruling is. And literally, you take a ruler and you draw the double lines. That's ruling. Proving is adding it up. So this, we do the same thing here. Total liabilities and owner's equity. So the sum of liabilities, and in this case, this is a sum because we've already calculated, equal liabilities and owner's equity. So the sum here equals this, proved and ruled. Debits equal credits. We've proved the equality of debits and credits, and then we ruled it with a double line to indicate, yeah, we double checked it. Okay? Guys with me? So then we compare the totals, and then we put the double lines on it. See, says so right there. All right. So what time period does the value in the Kim Park capital account represents when we do the trial balance? Okay, we start at 5,000. I'm going to go back up here just for the sake of demonstration. All righty, where are we? Right here. So we start with 5,000, but this does not equal 6,474, does it? No, it does not. We have to actually go and run a little bit of math on it. So let's talk about doing that for a second. We've got to add in net income, and then we've got to subtract out drawing to get the current capital. That's how much we've got in the bank account today. Not yesterday, not tomorrow, today. Okay, so what time period does the value in the Kim Park capital account represent when the trial balance is prepared? The last day of the month. Okay, you got to manually calculate it. Okay, there's an example in the book, and I want you to look at. I want you to make sure you're comfortable with it. So here's what I've done. Examples. Capital account balance, which is the amount you've carried over to the right two columns. Okay, this is going to be in the 7th column. Okay, your capital account balance, your 8th column. Okay, plus your net income, which is down at the bottom on the row that says net income or loss. Okay, you add capital account balance plus net income minus the drawing. Don't forget drawing. So if we got 10,000 and 2,500 income and we've taken out $1,000, that leaves a net of $11,500. That's our current capital. That's what we enter into the owner's equity section. Okay, so which one we got to do first? Well, we've got to do the income statement. Why? Because we need to know what net income is. All right. So again, here's the owner's equity report, and this shows the math. If you think you're gonna get confused and you're not going to remember, maybe you prepare the owner's equity section this way. So here's the starting capital balance as of the beginning of the month. Net income for the month, okay, 5,000 plus 2,099 minus drawing, minus 625 equals this. So 5,000's here. 2,099 minus 625 equals net of 1,474 increase in equity. So 5,000 plus 1,474 equals total equity, 6,474. So your change in equity is plus 1,474 for this month. Okay, that's good. So 4 sections of the balance sheet. Heading, assets, liabilities, owner's equity. Formula for calculating current capital, starting capital balance plus net income minus owner's drawing equals owner's equity on the last day of the month, which matches with your income statement. You guys with me? Okay, let's go to Aplia. Then I'm going to let you go. Alrighty, where is Aplia? There we go. Okay, so here's a work together problem. So what do we do? Oh, I'm going to have to get the book out. See, here it is. Okay. I'm going to jump back here so you can see what we're looking at as well. Now, I'm going to post the sheets from the workbook on PDF. I would love to be able to get them in my classroom and get them for you, but no dice so far. All right, so we need to look at the worksheet for the end of the month, April 30th of the current year. And what we have, Ken's carpet cleaning. So let's go to Ken's carpet cleaning. This is going to be cumbersome, isn't it? Let me see if I can resize all this and make it a little easier. Okay. That is not going to work. It's not going to work with me, is it? All right. Well, this will allow me to see what I'm doing. So Ken's carpet cleaning. This is a balance sheet, and it's for April 30th. Okay. So what do we put here? Well, our first, see, I don't need the book for this. It's assets here. Okay. And cash is always king. So I know cash goes first. And then what we got? Petty cash. Okay. Cash. So now I need my, I need my workbook. All right, so 7-1 work, 7-2 work together. Okay. There we go. Again, I'll post this stuff for you. So cash is 9,500. Then we got petty cash at 100. And then we've got accounts receivable, Betsy. Where is accounts receivable, Betsy? Okay. Betsy owes us 1,650. And then we've got accounts receivable, Chuck. All right, accounts receivable, Charlie. And it's 1,403. Okay. Then we got some supplies here. So our supplies is 220. And then we've got, let's see here, prepaid insurance. Now, in the next chapter section, we're going to have to make an adjustment to prepaid insurance. We've already drawn it down, but we'll have to go back to the journal and make a journal entry for the drawdown. But we're not going to worry about that right now. I'll show you that next week. Okay, so then we sum them up and 13,513. So $13,513. Sum of our left column. All right. So we're halfway done. Man, this is easy. Balance sheets are easy. If you've done your work properly on your worksheet, this is a breeze. So we'll go over here, liabilities. Okay. And what do we have here? So according to our worksheet, we have some accounts payable. We got a supply, lingering supply. There we go. That's our first one. Remember, alphabetical. So 548. So we pull the number straight out of the credit column. Then we got another accounts payable. Accounts payable. What's the other company? Taxes by Tomas. There we go. Taxes by Tomas. 111. Okay. So total liabilities. $659 if I can do math in my head right now. Okay. All right. 2/3 of the way done here. So now we got owner's equity. Okay. Here's where it gets tricky. So we got Ken Cherniak for capital balance. Well, this is where we got to do some math. See, because when we go and we look at the capital account balance, we've got $11,810. But that's not what we enter here. It is not $11,810. And I'm going to go back here and I'm going to show you this. Hopefully I can pull this up and it'll work with me. No, maybe not. Maybe I can pull it up here. There we go. Okay. Oh, hey, look, looky. So $11,810. It says capital, but that's our starting capital at the beginning of the month. So what we have to do now is take this, and then we go down to negative income, 11,810 plus 1,899 minus 855. And what do we get? Well, we get 12,854. Okay. So we then add 12,854 plus 659, and like magic, $18,513. Okay, so that's how you do this. Now, what I want you to do, I want you to do the on your own. That's your assignment for this week. That's all I want you to do. Refer back to the video as much as you want. And I'm going to schedule a Zoom meeting, I think, for Tuesday at 2 o'clock. So we can get together on the 19th as a group, and I think I'll do a joint meeting between I don't know, maybe I'll do accounting 2, maybe I'll do accounting 2 and 3. I don't know. Let me think about that for a little bit. But you're going to have opportunity to take a look at this and ask questions. So you've also got the Remind group. You've also got my email if you have any questions about how to complete this. But again, refer back to the video. I've walked you through this process. This is your assignment for the week. I'm supposed to be giving you about 2 hours of work. Well, I'll board you for a good half an hour with the video, and then you can go through and read the chapter material. I really encourage you to read the material, pull out your book, print your materials, work on the PDF. And the easiest way to do this is take a picture of it, submit it back to me through the link on Schoology. Quick and dirty. All right, guys, appreciate it. We are done.